Welcome to the Ascendo Traders Group. This is our 30-day stock market challenge, and this is supposed to be day 12, but as those of you who are following know that I haven't been able to put a video up. I've tried 3 days to get this video working for you guys. It just wouldn't produce, and I tried different computers, Macs, PCs, everything. I don't know what happened, so I'm actually re-recording this again, so hopefully this time goes through. Now, we said that this week we were going to dive right into technical analysis and technical indicators, and so we're going to start off with the foundation of it all, which is support and resistance. Now, when we think about support and resistance, we have to think about our old friend. That's right, the trend is your friend. So what we have to understand is that technical analysis is basically a belief of behavior patterns. That when certain market conditions happened in the past, a pattern produced. And so when those same conditions happen now, we're going to hope that that same pattern will produce and we can trade it based on past behaviors. Now we know that's not a 100% guarantee because all the same traders aren't in there. You know, we have new traders involved in the stock. We have different market conditions now than probably in the past. So it's not a 100% guarantee, but it is something that we can use as a statistical foundation of our trading system. So the question is, as we learn about this different technical indicators and learn about support and resistance and trends, will you allow history to repeat itself by not recognizing these opportunities of bouncing and reversals and let that trend move on without you? So what exactly is a trend? Well, obviously, as we look at this picture here, we have a stock that's in an uptrend. It's starting at the bottom left, and it's going up to the top right. Now, there can be many trends within the trend. As we look at this stock that's in a long-term uptrend, just like our last picture, you can see that it made a higher high, retraced back down to the uptrend line. This is called a lower high. Up, down, up, and then we have a shorter retracement and up and coming back down. So we have a long-term uptrend. However, we can have medium terms and short-term trends within that as the stock continues to move. So the obvious question is, well, how do we draw these trend lines? As I already pointed out, what we want to do is we want to connect these higher highs and higher lows. Now, the definition of an uptrend is a stock that makes higher highs, it pushed up higher, and higher lows. Now this low is higher than the previous one. Pushed up higher, made a higher low than the previous one. Pushed up higher, higher low. That is an uptrend. Obviously the reverse for the downtrend is a stock that makes lower highs and lower lows. And what we do is we connect the lower highs, and we could connect the lower highs to make a channel. We'll talk about that in a second. Or we can come right down and connect the lower lows in a downtrend. So we're finding commonality. Where does the stock bounce? Where does the stock bounce? Where do the buyers come in and take control? And you can see here on the channel, this is what we just said. We're combining the lower lows here on the downtrend and combining where all these touches are on the lower highs. So let's go ahead and take a look. So what we're looking at here is the SPY, which is the ETF for the S&P 500. We're looking at it on a 30-day chart and on a 60-minute time frame. And what we're going to do is go ahead and draw a downtrend line. So what I'm doing here is going back to about September 19th, and I found the highest high, and I'm going to connect the lower highs. So I'm going to go ahead and click, and I'm going to connect it over here to the next higher high, kind of bring it on down, and what you're going to notice is that it's not an exact science. It's really a preference thing. But what we have is we have our higher high. It pulled back as it made a lower high, lower than this high. It pushed back, came again, a lower high, lower than this one here. Pushed down, came in again, pushed down, made a lower high. So that's how I'm connecting these lower highs. Now, if I slide over here, you'll actually see that we had another even sharper downtrend line. And I'll go ahead and connect this line here. Bring it right down with these other lines. Here's our high. lower high, lower high, lower high. Again, notice that this is being resistance. Now, what's important to note about this, again, this is a spider, and what we basically have here on Monday. And what we can see is that this gap up on Monday gapped us above the short-term downtrend line. This is the long-term downtrend line. This is the short-term. We gapped up above it. So this could have been a great indicator for you to go long, at least on a short-term basis, because we were breaking out. We're breaking above resistance of the short-term line. Now, if we would have drew this line, you can see that we haven't broken this long-term downtrend line. But this would have been a good indicator that it was time to go long. So what is the importance of trends? Well, first and foremost, we want to be able to understand and identify these trends so that we can trade with them rather than against them. Remember, the trend is your friend, and we don't want to buck against the trend. So I know some of us have tendencies to try to short a short-term trend. Remember, we talked about those long terms, and inside that long term there could be other trends. And there's nothing wrong with buying a put in a stock that's clearly an uptrend. But you want to look for reversal. You don't want to buck the trend. If the stock's in an uptrend, it doesn't make sense to short it just because there's one tick down. Don't get in that tick battle of watching every single tick. So again, we said we wanted to start off with trends to go with our basic understanding of what support and resistance is. When we look at our picture here, you can see that really support and resistance are just trend lines, that's all. And what we're looking for, again, except for before we were looking for lower highs and higher lows and higher highs and all that other good stuff, now we're looking for commonalities where the wicks and the candles are touching. And then we see a reversal. So this is support because every time the stock came down to this 30-25 range, the buyers said this is a good price, and they started buying and putting buying pressure in and pushed it up to $32. Now you can see that every time it came up to this 32 price, the seller said, not so fast, my friends, and they existed their selling pressure to push the stock back down into support. Now, this is good because you can trade this, and it's also good because you can also identify potential breakout plays. Now, the other part of this is that role reversals. What was one support can become resistance, and resistance can become support. So we can see this line here, and every time it came here, the buyer said good price, and they pushed it up, and it came back down. Good price, pushed it up, pushed it back down. Good price, and eventually the buyers just said, "All right, I've had enough." And the sellers continued to have control. They broke the support, and now the buyers are saying, "Well, maybe, let's see," and they pushed it up. But was one support where the buyers said good price, now the sellers are saying, nope, this is now a bad price, and they pushed it back down. So support now has become resistance. Let's take a look. We are looking at Goldman Sachs. We're looking at a 3-month chart on the dailies, and we're going to try to draw some support and resistance. Now, we can kind of see as we're drawing this line up here, we have support here around 150. So I'm going to go ahead and click, drag it over. There we go. Also, we basically have resistance up here at the 187 range. So I'll click, drag it over, and let it go. Now, you can see we bounced off support, came up here to resistance, came back, came up here. Now again, a good trading system would recognize we failed to make a higher high. When the stock fails to make a higher high, it's probably heading down. Wait for confirmation. We get confirmation right about here, and you could have traded it all the way back down here to 150. We tested 150, bounced around a little bit. When we broke 150 here, this is a breakout, and we crashed from there. So this was another trading setting when 150 no longer held up a support. This is another trading setting that you can use to get out of the trade or to go short down to a negative position. So what is the importance of support and resistance? Professionals use them as a part of their trading decisions, again looking for reversals and breakouts. They confirm and both test trends. Again, we're finding out, is the stock going to bounce here at the support? Is it going to reverse at resistance? it both confirms and tests trends. It helps identify possible reversals. We talked about that on several occasions and showed that in our example. One important thing is, yes, support and resistance works. They're very important to know, but that doesn't mean that you need to trade exactly at those support and resistance levels. Look for confirmation. Look for confirmation. Okay, so I want to thank you guys for participating, part of the 30-day challenge at AscendoTrader.com. And as you can see, we're beginning our study into technical analysis. We have plenty that we're going to share. This was our video. We're talking about the Morningstar pattern that happened. So I want to thank everybody participating. We got more to do. And don't forget, this Saturday, 11 o'clock a.m. Eastern Time, is our review session. Just come to the 30-day Traders website like we did last week, and you can see there will be another link saying to join the webinar. Thanks for joining.